Sam here, and I'll be doing the weekly market review. We do have our work cut out for us this week, I believe, because while we are trading within a stone's throw of all-time highs, there are certain parts of the market that don't look completely correct. It looks somewhat unstable, at least that's my read on it initially, going into next week. But let's see if I have any reason to believe that, right? So that's going to be kind of the stick to the end catch line. There is, I'm going to start with a deep disbelief of what we're seeing here in the markets, despite the fact that you have a new daily squeeze there, which you can see on SPY with a max bull. So in theory, I should not be in any way doubting this, but I am. And let's see if by the end of the video I can disprove this doubt after we've looked at everything. So this one should be a fun one. Let's start here with SPY. Nothing has changed, right? I'm a broken record when it comes to that, it seems. Max bull, max bull. The three bars here against the grain on the weekly histogram for the squeeze, that can be a precursor to coming back down here to the weekly 21. Almost every single time, actually, that you'll get three bars, there's been a retest of three histogram bars, the dark blue ones that kind of go against the grain. That's been a precursor to going back and testing the weekly 21, which is the top of the cloud. So it happened there, and it happened there, and it happened here multiple times. But it hasn't happened since, and we haven't actually tested the weekly 21 not a single time since the tariff lows back here. So again, the chart doesn't give me any specific reason to doubt it, but that's part of the fun of this video, is let's see if we can disprove that. And this one might be a little bit longer one than usual, so I'll try to speed it up a bit because we have a lot to look at. On the daily time frame, really the only thing that's changed is you have a new one dot daily squeeze. Everything else here is really bullish. You can see the cloud continues to hold, and basically just by looking at the indicator up here, the fact that it says max bull is already calculating everything for you. So I don't have to go through and say, oh look, it's holding the cloud. That's good. The trend oscillator crossed way back here and is still good. You have arrows for days back here, and that's still good, right? I don't necessarily have to do that because the indicator is already taken care of that for me. So it's still 100% max bull, and it has a one dot squeeze for the first time since the lows. So interesting times. Kind of a naughty candle today where you had a little bit of a kind of the same thing as last week, actually. You kind of have a little bit of one of these traps where you trade above the all-time high, but then you close below the previous all-time high, which again is a little bit of a funky kind of situation. So let's we usually spend more time on SPY than everything else because everything else is just basically either a stronger or a weaker version of SPY in terms of the indexes, at least. So let's go to the NQ next. And the NQ here is really where it gets a little bit more interesting. Where did we close on this? 76. Okay, so again, I'm for whatever reason I'm finding myself doubtful of this setup, and maybe that's a good thing. Maybe doubt. Well, we know this actually. We know that doubt has been the fuel for this market, right? The more that people doubt it, the higher it goes. And it won't probably not be until everybody absolutely loves stocks and never thinks they will drop that it will actually drop. And right now, the seasonality as well as just the general sentiment, it seems to be more bearish than you would imagine as the market trades near all-time highs. There was kind of a pattern here on the Qs, kind of a little bit of a head and shoulders kind of thing. And I like these patterns in bull markets because they don't usually tend to work. And if you want to see kind of a giant example of one that didn't work, you can pull up Microsoft Weekly, and it has this exact same pattern. And then it proceeded to do that when everybody, the textbook head and shoulders would typically do that. So I actually think this is a bullish pattern, or at least it has the potential to be a very bullish pattern because it looks so bearish on the surface. But if you're able to take out this high, then basically it invalidates the Head and Shoulders bearish pattern and basically sets you up for new all-time highs. Aside from that, I mean, everything else here is about the same. The only difference is there's a slightly lower quality to the Qs, where they're only 80% of max versus the S&P, which is 100% max bull. And then you have a one dot squeeze here. So far, as we go through this, I'm starting to feel a little bit more kind of okay with everything. This doesn't look terrible to me, but we've got a long way to go in this video, so make sure you stick to it till the end, because that's when we'll make our determination as to whether this is a bluff by the market or not. So look at the DIA here. I don't really look at the DIA all that often. I think as long as it holds above 450, I think it's generally going to be fine. The reason I don't want it to get under 450 is because that's the previous high, and what you definitely don't want to see is for it to go above and then below. But we're closing 455 today, so that's not a huge deal. And you do have a max bull here. There is no squeeze here, which is fine. The Dow's had itself a good run. And then, of course, on the weekly time frame, it's a 90%. So Dow is kind of like if the Nasdaq and the S&P had a baby. That's what it would look like. It would. It's a little bit stronger than the Nas and a little bit weaker than the S&P. So this has been part of the theme that I've been covering in this video with you guys, and the Friday video that I do, and that is kind of the idea of around the barbell. So this is another thing that I'm looking forward to either proving or disproving by the end of the video. The barbell trade, in case you missed it, is IWM on one end and Mag 7 on the other. And frankly, this has been actually spot on, pretty much since we started talking about it. And I'll actually show you. I'll show you the exact symbol that I used to arrive at this conclusion. But I will only do it if you click like and subscribe below. And you know what? Just between us, I won't know if you did or didn't, so I'm still going to show you anyways. But it would be nice if you did. So the barbell trade is IWM and then M7, Mag 7, and then ignoring everything in the middle. With IWM, I'm kind of using this as a catch-all for banks and industrials and basically anything that's not tech. It's just my shortcut way of saying that. And then, of course, M7 is all the giant tech stocks. And I want to ignore everything in the middle. And, of course, I'll show you the specific signal that I'm using to generate that opinion. So far this has actually been working. The IWM has been working well. This week tech was kind of bleh, but there was a lot of specific pockets inside of the Mag 7 that were great. Google was one of them. Amazon had itself a day. Tesla had a day today. Apple had a day. But then they're not all participating, right? You had Nvidia getting smacked. And really off the top of my head, that's the only one that really got smacked. So the barbell trade remains live, and we'll continue to try to focus there, or at least I will try to continue to focus there. In terms of the IWM here, this continues to be the best looking one. It doesn't have any squeezes or anything, but it is trading well, and it put in a weekly candle that's better than its peers. So here's kind of my thing with this is I don't see how the market tops without IWM making a new high. Because it has a monthly squeeze, which we've looked at in a previous video, and the monthly squeeze kind of takes you into 267-ish, way up there at the upper target. So my bias and my preference is that we have kind of this blow off top, which gets everybody into the stock market, and then that's when potential issues will arise. Usually when everybody's cautious, like how many of you have heard people this week, or basically even leading into this month, telling you how bad seasonality is for September, right? Everyone, like my mom called me and told me, hey, did you know that September seasonality is bad? And my mom doesn't know what a stock is. So if we think about it from that perspective, if everybody knows that the boogeyman is under the bed, then is there really a boogeyman under the bed kind of thing, right? In financial markets, usually the big monster under the bed only shows up when nobody thinks he's there, not when everybody is expecting it. So just something to consider there, or at least something I'm considering. IWM here looks fine to me. I don't really see any major issues. This candle could be better, but at the end of the week, this candle is proper, and as long as we hold the low of this week's candle, I think it's completely fine. And I will admit, as we're going along here, I am getting a little bit more constructive with my thinking, right? Because I started the video with a high degree of skepticism, and actually, assuming I don't see anything just truly miraculous, I will have to maintain some level of skepticism, but less so than usual, based on what we're seeing here as we're going through the charts together. So next up is HYG, and HYG, as always, we look at it as a measure of risk appetite. And to me, this looks fine. I don't see any major issues here. It's holding above this key level here at 80.5. Bullish chart, green on a bad day, or at least a down day for the indexes. So all of that looks good. The other one I would add into our equation here is LQD. And this is a hell of a week for LQD. Now, as somebody who has their entire 401k in bonds, because I'm clearly 90 years old and that's what I do, this is actually pretty good for me. So this is bullish as well. It's hard to read this as not bullish. What would be bearish, just so you know what I'm looking for, is if stocks were down, bonds were up, meaning interest rates down, bonds up, and LQD and HYG are red. That's like really bad. You don't want to see yields go down, bonds up, yields down, and HYG and LQD red. But so far this is acceptable, so I can work with this. Let's go to the VIX. Oh, the VIX, perpetually down here in the basement. I don't see any major issues here, but I would just be on guard because we're eventually going to round out this weekly squeeze histogram. You see how it's not flat yet, but it's on its way to being flat. Very similar to back here. And after it goes completely flat, that primes the pump for a big move up. This doesn't appear like it should be ready for another maybe 4 weeks. So maybe October is more of the surprise than September, which would suit me just fine. But I don't see any issues, but I would just be counting down, and of course we'll do this together every Friday until this goes flat. If you want an example, you can just look at the previous example back here before that primed the pump for liftoff. So I don't see any major issues there on VIX at the moment. At any point the VIX can go ahead and just snap back, but I don't see major issues until the squeeze histogram is nice and flat. The VVIX here, same thing. Very, very subdued, and I don't see any issues here. So what else would we look at? We could look at the dollar, but I don't get a ton of information from that. Let's go ahead and just move forward. Let's look at everything here as a basket, and then let's just see how it all shakes up. So SPX here, Max Bull. This is the indexes, by the way. So it's the S&P, the Nasdaq, the Dow, the Russell, and then world indexes. Earlier in the video, I told you I was going to tell you what information I was using or what chart I was using to come up with the idea of the barbell trade, where I want to be in either IWM and industrials and banks and things like that, or I want to be in mega cap tech, and I don't want to be in the middle, meaning all the middling tech for the most part, right? There are standouts like Reddit today was great. I'm sure there's a few others, but in general, here's the signal that I'm using. It's the QQQE. So this is the equal weight NASDAQ. And basically, this is what the NASDAQ would, this is kind of cool. This is what the NASDAQ would look like if it did not have disproportionate weighting from Nvidia, Apple, Microsoft, Google, Amazon, Tesla, Meta, and the rest. And you can see here as we go through the chart, right? We color coded everything, so it's nice and easy. So everything is green. There's gray here. That's Germany. I don't necessarily, I do care about Germany in terms of like its proxy relationship to what Europe does, but for the purposes of this video, you see how everything here is green, and this is the only thing that's gray. So this tells me again that it's just suboptimal to be trying to play tech outside of the mega cap tech. And it's actually even more in your face because right next to it is the Mag 7 index, right? And you guys can go back and get the formula. I'll maybe even include it in this video. I think it's, I'll go ahead and give it to you in the description of the video. Again, I'll make a barter with you. I'll give you the Mag 7 formula in the description of the video, but you gotta leave us a like, and if you're not subscribed, click that subscribe button, with the understanding that I will never know, and even if you don't, I'm still going to give you what I promised you. So right here you have the Mag 7 on the left, and you have the equal weight on the right. And notice the massive difference between the two. Right here you have a bunch of blue and a bunch of gray, and then this is just a parade of green. So very much right in your face in terms of like, well, do you want to trade something that's 100% or something that's negative 25? So long story short, this tells me to continue to look at the barbell trade, meaning IWM on one end, Mag 7 on the other, try my best to avoid everything in the middle. So with that understanding out of the way, let's go to the sectors and see what's up there. And admittedly, and maybe this is famous last words, I am feeling a little bit more comfortable with the assessment that the market could try to make a push next week. It is really seemingly unstable. I'm going to point out a couple of things that I'm seeing here that we may not have time to cover, but I'll leave this for you to cover on your own. And that is when you see software sell off. So you could look at software through IGV, India Golf Victor, and then you see semiconductor sell off. You could look at that through SMH or Nvidia. That creates a problem. Today, we had a third support beam, for lack of a better way of saying it, in the banks. The banks got hit pretty hard today. So now software is getting hit first, which usually happens. Then they go and attack the semis, and then you take out the banks third. And if you do that, those are the three most important components of the market. So, I can say that that makes me super comfortable, because if you lose software, you lose semis, you lose banks, what are you left with? Well, you're left with industrials or utilities, healthcare. This kind of stuff can't hold up the market. And when you have that dynamic, it's like having a three-legged stool. All three legs are on one side, and there's going to be someone who's 500 pounds that's going to sit on it. Like, that's a recipe for disaster. So let's dive into the sectors here just to see what we see. So the SPY there with 100% and a squeeze, we like that. ARC, serviceable pattern, especially if Tesla can play out. What's interesting is ARC kind of cuts both ways. I think that it's a great short. If the market breaks short, I think it's a great short, and I think if the market breaks long, it's a great long. But I would actually probably just play Tesla. So ARC there's actually not terrible, but the score is middling, so you need something underneath it. XLC, the communication sector, continues to be rock solid, so we like that. Banks got hit today. We don't love that. They got hit very hard and somewhat unexpectedly. They were one of the best. They were the best sector yesterday. XLI middling, XLK degrading here into blue. You see all the green here, and today's a blue candle, which isn't great. Staples are purple, which is down, but who cares about staples? Utilities are gray, no one cares. Healthcare actually could make a run here. I recognize this pattern as a basing pattern, and it looks like it could want to take off. Healthcare is a pretty big component of the market as well. So if they're going to have to rotate, let's say that the banks chill out or anything else chills out, rotation into healthcare actually makes sense. Discretionary, consumer discretionary continues to be rock solid as well. And then semiconductors are starting to show some blue candles, which you can see there for yourself after a very long string of greens. So maybe we can put a point on it here. I don't love the fact that the market has lost this. And when I say lost, right, I'm being very critical. Like, it's just not as bullish as the market. What I'm looking for is for things to be as bullish, if not more bullish, than the index. Semis do not qualify. Tech, XLK, does not qualify. The banks no longer qualify as of today. So, it makes things a little funky. It makes things a wee bit funky. So last week we covered 3 stocks that I was looking at, and they're all actually still set up. The one that's actually had a big lasting move was actually gold. It's funny how the most obvious one is the one that played out in the most obvious way. So, if you got into gold pretty much at any point this week, even yesterday, 100 ATR up, you're doing quite well in gold. We still have a position in the room, although we would do a lot better if it actually pulls in a little bit with our butterflies. But at least we have a little piece of that, and we're sitting at over 100% on the trade. The other one I brought up was Carvana. Now, with Carvana, I had a feeling it would be a little bit weird, and it actually hasn't really done much this week. And the reason that I maybe would not want to reiterate this one is just because if I'm really trying to take advantage of what we're doing together in these videos, the main thing that we've discussed in the video is the barbell trade, right? And what that means. IWM on one side, M7 on the other, Mag 7 on the other. Where does Carvana land? Carvana's not, Carvana's like tech adjacent, but it's not Mag 7. Carvana lands exactly here, which is the part of the barbell I'm avoiding, right? So not a bad close on Carvana, especially, to end the week. And it actually still has a very good 2-day squeeze, which I think is very much in play. But I went ahead and closed my room trade on this one. I do still have some personal trades on Carvana, but in terms of like a fresh idea, I don't know how much I really like it. And then, of course, Rocket Lab here. So Rocket Lab is a fun one because it's a wild one, right? You definitely need to have a fresh pair of shorts if you're going to trade this one, it seems. So with Rocket Lab here, I want to say that it's still good, but it's certainly nowhere near as good as it was last week. And really, it all comes down to one candle. This candle from Wednesday. What's interesting about Carvana is on this candle, the NASDAQ was getting smacked, and Rocket Lab opened down, closed green. Very bullish for a high beta stock to close green on the day where the index is red. That's very bullish. On this day, NASDAQ got smacked up again, even harder, and Rocket Lab opened down and then closed near the high of the day, closing deep green on a day where the NASDAQ was down. So I'm thinking, okay, well, Carvana or Rocket Lab here is bucking the trend. This is great. We've had 2 bad days in the NASDAQ, and my beloved Rocket Lab is just fighting her little heart out to be green. And then on Wednesday, the NASDAQ was actually positive most of the day, and Rocket Lab gapped up, hit 51, and then drilled 15% and closed at the dead lows. So whenever you're trading stuff like this, you have to ask yourself, is this ever kind of the life you want to live? I've certainly asked myself that. And while I think this could work, at this point, I have no idea. I doubled down on it yesterday. So my average cost is I'm actually pretty much at break even on my average cost at this point. But as I look at this chart, it's just a neutral chart now. So I actually have to wait for the next signal in order to reiterate Rocket Lab here. and I'm just not really seeing it. If we go to something like General Electric, this is a trade that I was in, and I thought this was kind of like a buy the book trade. I thought this was a relatively clean, easy trade. I got out of it yesterday, which I suppose is a good thing. But even this one, look at the ranges that this one is going through, right? So there's all kinds of funky stuff that's going on out there, and I'm a little bit hesitant to tell you go trade this stock or that stock because in reality, most of these stocks aren't holding their gains. Like GE here, I sold it yesterday at the double top right there, and then this morning it goes cliff diving down $10. Now it did close decently. It only closed down 3, but very naughty action here in something that should be more consistent. Another one was Schwab. Now this one was extraordinarily naughty because there was really no sign of any impending doom. And then look at the size of the candle on this guy. So this is kind of the stuff that's a little bit concerning to me, is that when you start drilling some of the best setups in the best sectors, while already having taken out software and then working on taking out semis, that is a concern. So let's put a point on everything, right? Because we've covered a lot in this video. I did promise you it would be a long one, so hopefully you stuck through to the end. But let's kind of wrap it up here and make an actionable plan. I started the video with a good degree of skepticism, which is not uncommon for me. But I started the video with a good amount of skepticism because I did not like the dynamic around semiconductors and then software. Software first, actually. Software got hit first, semiconductors got hit second, and then today the banks got hit really, really hard. And that's like the trifecta, right? Like software, semis, and banks is like the most important parts of the market, and they've all gotten hit. So that made me skeptical. We go through the charts here, and admittedly, I'm a little bit more optimistic than I was when I started this video, so that is a plus. But I still think that for myself, I'm going to just hold the risk that I have going into next week and look to day trade, because I think that these are opportunities that are best expressed not by holding overnight positions, but more so by having a clear mind and being able to react quickly when you get an intraday signal. And I think we'll get plenty of those next week. So that's kind of my game plan going into next week. I will hold what I have unless I see a reason to get out. I will hold what I have and then look to find day trading opportunities, probably using like 15-minute to hourly squeezes on things within the barbell trade. So that's a key part as well, within the barbell trade. IWM on one end, Mag 7 on the other. All right, guys, that's my time. Thanks as always. See you next Friday. Cheers.